Welcome back. You're still with us on Startup Street. On the hot seat today, supply chain planning and logistics startup 3SC has secured $4 million from its existing investor GEF Capital South Asia Growth Fund. The Delhi NCR-based startup will use the fresh funds to boost its existing artificial intelligence tech stack and scale its operations globally. Now, the startup last raised $15 million in a Series B round led by GEF Capital South Asia Fund back in 2021. Joining me now to take this forward is Sarita Das, the founder of 3SC Supply Chain. Sarita, thank you so much for joining us on Startup Street today. You know, you provide supply chain services across an array of sectors. If you could quickly take us through the services you have on offer and how are you making this process more efficient for your clients?
I wanted to check if my audio is clear to you.
Yes, you're clear to me.
Thank you. Thank you for giving the opportunity to be here on this show. 3SC is basically providing service offering in two BUs that we have. One is the planning suite that we have through which we help the organization increase their top line, improve their bottom line, and we help the organization reduce inventory and be more optimized and efficient in their supply chain, and thereby contributing to the sustainability in the supply chain domain. That is one vertical we have, which is logistic tech SaaS. The other BU that we have is logistics, which is tech enabled. And therein we are doing integrated logistics, which includes the warehousing, distribution, digital control tower for PL services that we are doing. And the second vertical is primarily focused in India, and the SaaS vertical is focused globally. And I think these are two verticals by which we are focusing on the supply chain vertical across industries.
Right. So to your key verticals there, you'll primarily use the funds that you've raised to boost your AI play. Can you give us a sense of the kind of tech you're using and how AI will help enhance your offerings and scale the business?
So the products that we have are AI-based, right? So whether it is the IBP or we have the sustainability solution, which is CarbonX. So all this, the fundamental layer is AI. It is self-learning algos that we have created. And the USP that we have is the configuration across industry agnostic configurations that are reducing the implementation time. And these are the bolt-on system that we are creating, smart intelligent system, which make the decision making easier for any of the supply chain users.
Right. So you're present in India, Europe, Southeast Asia, Middle East, and the US, right? So you said one part of your business is focused on the global countries and one part is focused on India. So can you elaborate on how big of a focus India will be going forward? And what about global expansion plans?
So for SaaS market, you know, it's global, and we have been there in Netherlands since 2018. In Singapore, we started our presence in 2023, and Middle East also in 23. So going forward, US is the market that we are focusing extensively this year for our SaaS products. For logistics market, anyways, there is increasing demand even in India itself, and our focus in India market for 4PL, for control tower services, for our logistic tech enabled services, that is all primarily focused in India. We have been growing in this vertical double digit for all more than a decade now. And I think that remains the focus area for us here. On the SaaS vertical, the global market last year, we grew 3x.
All right.
So I think, that's how the expansion plans are going forward as well.
Okay, and you know, your revenues grew 1.71% on a yearly basis, but your losses also widened to 2.3x, right? So what are the revenue targets for this year, and how do you hope to reduce your losses? What about profitability?
So I think initial 2 years for SaaS. So if you look at the last decades, we've always been a profitable organization. It's only last 2 years when we clocked losses, and I would not actually call it losses because those are the investment to build our product portfolio, since we added a new vertical, and product journey takes couple of years. So I would say it's an investment, not a loss for us. And in terms of path to profitability, I think with the product getting ready to market, and we have started already some implementation, some deployment in the market. So I think with that, we see by end of coming financial year, we would do a break even.
All right, so break even in the coming financial year. All right, Sarita, thank you so much for joining us on Startup Street today.
Thank you so much.
Okay, on that note, it's a wrap on this edition of Startup